Welcome back to Insight. Hi, I'm Jack Hammer, and I would like to welcome back Heather Foster. Thank you for being here today.
Good to be back as always.
You have enlightened me in the 2 meetings that we've had to a lot of things going on when it comes to saving retirement and just trying to make a better life for yourself.
Yes, there's always changes with everything, right? When it comes to money, legislation, taxes, there's always changes. So there's always something to talk about on here, whether it's the stock market's doing something crazy, inflation, interest rates. We've always got relative topics that we want to communicate about. And in everything we are dealing with right now, markets going down, inflation, right, interest rates going up, mortgage rates going up, there's some positive news.
Positive news is what?
Positive news, right? So the positive news is Indiana legislation just had some changes to their 529 plans. So one of my good friends, Martin Carball, actually helped to propose and underwrite the new bill, but they have raised the 529 contribution to get the 20% credit to a higher level. So
well, that's fantastic.
You get more money back on your tax returns if you decide you want to put money into your kids or your grandkids' 529 plans. So it used to be that you got a 20% credit on your state tax return if you put up to $5,000 into a 529 plan. And they have upped that, call it inflation if you will, but they've upped it to if you put $7,500 into a 529 plan, you will get $1,500 back. So finally some good things.
Yes, that is very good because we are looking at, we're not making any money on our money.
Yes.
We most definitely need to save and save in places where we can make ourselves more secure as we go forward and our children.
Yeah, I mean, think of it this way. If you've got grandkids or kids and you put a donation into their 529 on their behalf for education purposes, one, the money grows completely tax-free. So when we do have the comeback of the marketplace, all of that growth in the 529s are going to be completely tax-free. So it might be a good time to go ahead and make your donation into the 529s. We call it front loading. You're buying into a market drop right now, so you may want to go ahead and front load that. On this legislation change, it goes into effect July 1st of this year, but it actually doesn't start applying until the next tax year. So we're not going to get that extra credit for 2022, but starting in 2023, you'll get the extra credit. The other thing on the 529s, I just want to address because I feel like it's a little bit of a misconception. When you tell someone that if you put $5,000 in, you'll get $1,000 back in your pocket, that's an immediate 20% return on your money as the person who made the donation.
Fantastic.
Wonderful. But the misconception is that they think that that's all they can do. So I hear this a lot from people that goes, I really would love to donate more. I know college is going to be more expensive than just this $5,000 I'm putting in for my grandkids. You can put more than $5,000 in per year or $7,500 starting next year in. It just means that you're not getting a tax credit for the additional amount that you're putting
above that $7,000.
Above that, that's right. You still get the tax-free growth though, so there's still a benefit in putting in money for college purposes or K through 12, which that changed a couple years ago, and I don't know if everyone understands that there's also, that you can also use now 529s in Indiana for kindergarten through 12th grade, private school, uniforms, school books, pencil, paper. You want to buy a laptop for school purposes. You guys can use this now for K through 12 as well as post-secondary education for college purposes. So fund those. I tell most people, whether it's one grandchild, another grandchild, your own kids, someone will probably use this money. You can also change the beneficiary, so it's important to remember that if one of these kids do not go to college, because I get this a lot, well, what if they don't go to school? That's okay. You can always change the student beneficiary. You're the owner of the account. The beneficiary can be changed at any time. In fact, you can move one person's money to another grandchild. So no penalty. It's still tax-free, no issues. So if one decides to not go to school, that's okay. You can give it to one of the other kids that might. And
it also might be a good thing to hang over the other kid's head, that you can take the money and put it over at them. Heather, thank you so much for being here today. Yes. So if you're looking at your 529, what a great time for you. And it's this easy. If you have any financial questions, then call the number on your screen for a complimentary consultation today.